This video is going to be over the 22nd of July. So coming into the day, spike in channel. What do I expect? I don't expect another spike in channel. I expect sideways. Disappointing follow through. Couldn't get above the moving average that much. I think we'll fall. I think we're going to have something disappointing, but I'm not expecting a bull trend. So bar one, outside down. You can buy. If you do anything, it's sell below. But after this strong of a breakout, I think we're going to go sideways. I'd rather wait to see what happens. Follow through, but closing at its midpoint. I think a lot of bears are going to look to buy and buy more lower. And that's why. So big bull bar, but at the top of the range, tight channel, breaking above the channel. I can say the channel is a few ways. I can say it's here, like that, and we're breaking above the channel. I can say the channel is here, and we broke below the channel, tried to break below the channel, and we're trying to break above it. It's probably going to fail. Bull channel, bear flag, so I think we're going to go sideways. More importantly, tight trading range, 50% chance every open can fail. Big bear bar. So one of the other problems you have with the big bear bar is big bar, big risk. If I sell below the bar, stop up here, what's the probability? Is it 60%? No. Is it 50? Probably. So if I sell below this bar, stop up here, 1 times my risk, 2 times my risk. It's not a great trade. It's an okay short, but I don't think it's that great. I'd rather wait for a breakout. Doji bar, disappointment. It just shows you bulls bought this low. So a lot of bears did sell. And if they did 2 things. And take this with a grain of salt. I wouldn't think too much with this, but it's interesting. So bears sell, they scalped out. Other bears would say this bar is so big, what I'll do is I'll look to sell 50%. I said that on the other video. And trying to find an example over here. It's kind of like this. This is such a big bar on a time frame. Let's just say it's 30-minute chart. So if I go to a 30-minute chart, it's right here. This bar is so big that what I'm going to do instead is I'm going to buy a 50% pullback of the bar and reduce my risk. I think we will get a measured move up based on this bar. However, if I buy 50%, that's half my risk and my probability is better. So here's the bar, here's the low. I'm going to put a limit order right here. I get filled, put my stop up here. If I go for a target of 1-to-1 at the high of the bar, I've got a higher than 60% probability. But what I could also do is buy 50%, which is somewhere over here, and go for 2 times my risk. So that's what I'm talking about. But back to the day, bears sell 50%, scalp out. What do bulls do here? Some will buy. However, it's a really tight trading range. I don't think, again, it's not a great buy. And all through here, I'm expecting some sort of bear breakout sideways. It's a limit order market. Bears, bulls buying, scalping out. Buying below, scaling and lower, scalping out. Bulls will sell. They'll sell this high. They'll sell this high for a scalp. Breakout, follow through bar. It's a breakout bar. It's a breakout bar. Bulls, what do they want to see? Well, bulls they got to close above this top. They want to see follow through. And no follow through. Broke back to the downside. Starting to go sideways. One thing you have to wonder is this going to form some sort of small pullback bull trend? So broke above these highs. We have a little gap here, a little gap here. Breakout bar. Are we going to close the gap? Yes, we did. So again, disappointing. We rallied, 50% pullback, tight channel. Some bulls will buy and scale and lower. Other bulls probably better just to wait. And then we got a breakout, so you call it a wedge, 1, 2, 3. But this could be a bear breakout below a wedge. So what happened here? Well, this happened, if you go to my video on the 23rd, it's the same situation that I talked about with, same situation I talked about over here. Here and here, we broke out, and then we got followed through. Well, what could happen over here is so where were we? Here we go. We're trying to get a wedge. 1, 2, 3, maybe 1, 2, 3. So we have a breakout below a wedge, and you have to be careful because it's very enticing right here. You say, that's a terrible looking stop entry short. It's going to fail. I'm going to buy the close. Then you get followed through. Now you got a bear bar closing on its low. This may trap traders that were buying low. Then we have a bull bar. So what are traders going to do? It's confusing. 1, 2, 3. Strong enough breakout, you could get a second leg down. I wouldn't buy above this bar, and if I was short, I'd probably get out above the bar. And look what happened, it didn't trigger. So now we have another breakout. So we got a breakout, gap, and another breakout. What's the follow through going to look like? Consecutive sell climaxes. If we get another bull bar closing on its high, it might be worth buying. Weak bar, tight channel, always in bears, get out above a bar. Aggressive bulls buy. I probably wouldn't buy again. I'd probably just wait. Bull bar closing on its high. Probably an okay buy. I would definitely get out of shorts. Stop below here. And outside down. So if you did buy, you get stopped out. Breakout, follow through. Strong enough though, you're probably going to have at least a second leg down. But one of the things you have to be careful with, we have a wedge, 1, 2, 3. Could be a second leg trap. So breakout, follow through, closing below this low, but not closing below here. So it'll be interesting to see. We have a major low. Another major low. What's going to happen down here? And disappointment. So do bears get out above this bar? Some will. Others may wait for a second leg down. And there's our second leg, and then we get a big bull bar. What happened here? Well, the odds were this was a surprise and you get a second leg down. Surprises can also be strong. I mean, that could just simply mean another leg. So as simple as breakout strong enough that we'll get a second leg up. Well, we had a second leg up. It was this tail. So bear breakout strong enough, we'll get a second leg down. We had the second leg. So we pulled back, second leg. We also closed the gap. Low of this bar, 46.25. High of this bar, 46.25. It's a perfect measuring gap, but in a trading range day, you have to be thinking, this is strong, and the odds are we're going to go lower. But whenever you see this, you've got to be, kind of the red light sirens going off in your head. You get a breakout here, but you didn't break below here. So odds are you may get a second leg, but if you don't get a strong breakout below these lows, it could fail. You also have to be wondering, best looking bear bars late in the channel in a trading range day, a few legs up, trading range day, a few legs down. So big bull bar, if anything, you have to get out above. It's probably always in short, always in long above this bar. Bulls will buy, stop below here. Disappointing. Then we have another breakout, so it's basically follow through. Odds are you're going to go higher. Bulls will buy, stop below here. Disappointing, but could be a pullback. Strong enough rally. Some bulls will try and buy 50% pullback. And we're rallying, tight channel. Bulls need to break above these highs. Just trying to do some, well, it doesn't matter, but bulls trying to break above these highs. They broke above this high here. Bad follow through, a lot of bears. I'd probably get out below the bar, wait for a couple legs, pull back. Odds where you're going to get above the high of the day. You're probably not going to go much above it. So here, same thing. Some bears, they'll sell above the bar and get out back the original. So if I sell here at 58.5, my entry is 58.25. I sell again at the high, which is 60.5. In other words, let me just do it like this. I sold below 58.25, and then I sell more above the bar. My entry is 58.25, so it did let me out there, and didn't let you out there. I think a lot of traders would be quick to probably get out break even. I'm not saying that's a great thing to do. More likely is the opposite. Well, it's not the opposite. Traders wouldn't sell here, but they would sell more above the bar. Although you do get out. I mean, it's hard to do that though when you're getting close to in this tight of a rally. But anyways, sold below the lows, tight trading range, possible final flag, breakout, failed. Odds were this was going to be exhaustion, and after many bars sideways, it became higher probability we fell below it and started to go sideways. Rallied strongly into the close. Bars always in. So on the open, probably wouldn't sell here. Aggressive sell below this bar, stop up here, but if you did, probably get out above this bar. Certainly above this bar. New bulls buy. They probably can, but if you do, probably put a stop below the bar. 2 legs up, no reason to get out here. And II, consecutive inside bars, triangle. A lot of bulls probably get out below this bar, or certainly after 2 or 3 bars. And, do they buy here? No, probably tight channel. Do they buy this above this bar? They could, but again, tight channel. Another bar, I think it's okay to buy here, but if you did, you get stopped out below the bar. And if you were quick, you could sell the close for a scalp. But again, not a great buy. And, would you buy here? Probably not, but if you did, worst case, you're going to get stopped out above the bar, below the bar. And at some point you have to buy. Maybe you buy the close here, stop below here. Always in, I would definitely get out above this bar. And I don't know if I'd want to short here. It'd be difficult, but if I did short, I'd probably get out above this bar. If not, during this rally, you'd have to get out. I'd hope I'd get out on this close. But worst case, I'd get out somewhere at the close of this bar. So at the close of this bar, always in long, bulls will buy the close. So bulls will buy the close. And no reason to get out, no reason to get out. Breakout, sideways. Probably get out below this bar or this bar, and a couple legs down, maybe you can buy here, start buying closes, stop below here, and get out. Hope this video helps.